Hey, this is Matt from InvestiQuant. Today is Tuesday, September 29th, 2020. And yesterday we saw the markets gap up sizably, consolidate most of the day, and closing sizably higher than Friday's close. So we made some recent highs in yesterday's session. And today is the day before the last trading day of the month. So we're approaching the month end. We're coming off of recent highs. The overnight session tested higher, tested lower, and currently is trading around yesterday's closing price. So what I want to do today is take those key pieces of information and see what that has led to historically. So let me set this up and discover. We'll be looking at all four instruments. The setup is going to be based upon getting long at the open, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. Now, for the opening direction and opening filters, I don't really know which way we're going to be opening. We're currently down just a couple points at the time of this recording, but who knows where we're going to end up at 9:30 a.m. Eastern Time. So instead of using a gap direction and gap location, I'm going to use the gap size as a percent of the 5-day ATR. And I'm going to say that the open is within 25% of the 5-day ATR. And just for reference, the 5-day ATR in the S&P right now is 71 points. So 25% of that is around 18 points or so. So this would be a gap in either direction of less than 18 points in the S&P. Next, I'm going to go in the price patterns and add a little bit of context around yesterday's strong move higher. And I'm going to say that yesterday was a 5-day high close. So if I just hit equals next to 5-day high close, that's going to add it to the test. I could just come over here and click on day after 5-day high close, and that would add it as well. Next, I'm going to go into indicators. I'm going to say that we're above a 200-day moving average. I'm just going to use the 200 since I've already got some price context around a 5-day high close. That's pretty much going to be above a 10-day moving average in the majority of the samples. And then lastly, I'm going to come into the calendar and add this seasonality aspect that it is the day before the last trading day of the month. So once I hit equals there, I can hit view results. And here we go. So these are the results of going long at 9:30 a.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time on the day before the last trading day of the month. This is taking place after a 5-day high close above the 200-day moving average and a somewhat flat open, which I'm describing as an opening print that is within 25% of the 5-day ATR. Now, historically, this has happened 37 times in the S&P dating back to 2003. The NASDAQ has 36 samples, the Dow 28, and the Russell 37 samples. And win rates on these coming in mostly favored. So S&P coming in 59%. Ending up with what would be a green daily candlestick that day. The NASDAQ stronger at 72%. The Dow a little bit stronger than the ES at 61%. And then the Russell more neutral than the others at 49% winners. And if we look at the average win to average loss, you can see the S&P $251 on average for a win here versus $421, and this is based upon trading a single contract of the ES. The NASDAQ, you've got larger average loss as well compared to the average win size. That holds true for the Dow, a larger average loss than the average win, and the Russell, a slightly larger average loss than average win. So historically, the win rates on these have been mostly favored, but the bigger moves, when they've happened, have happened on the downside. So hopefully you found that helpful. Good luck today, and we'll see you next time.